July 2nd, 2024. Today started with an expanding triangle. You can see we were within essentially yesterday's breakout mode, right? Because we had obviously the rally, and then why is this lagging? Okay, we had the rally, and then we went sideways for longer than we probably should have. Usually, if it's bar, I don't know what's 1225, bar 30, 35, and you're starting to go sideways, you're probably going to get one more swing. But we didn't. We instead started to form an expanding triangle. You can see we continued that expanding triangle pattern on the open. We also got a measured move up of said expanding triangle once we got the breakout. So you can see, oh, sorry, it was with bodies. We got the measured move up, and we were about, one or two ticks shy. But with a measured move that's that big, if you're one or two ticks shy of hitting it in reverse, you can pretty much consider it tested. Ended up being a pretty climactic day. Most traders were probably not expecting, once we started to get this, I thought we were going to go sideways for a while. And if we did break out to the upside, it would probably be a little bit later. I thought we would go sideways more, but we ended up getting a bull surprise on bar 44. The important part about bar 44 is that it closed above the 27 high, confirming the breakout for the bulls, so making it a bit more bullish. Yesterday, I thought, like I mentioned yesterday when we started this rally, I thought it was possible we end up getting all the way back up here at some point. I didn't think we were going to do it today. But in theory, if you had taken the buy early here with, the premise that we were going to go all the way up here and you didn't get out at the end of the day and you just held, you would have been able to make money on that type of trade. Bar one, a bull bar closing near its high. I think bar one's pretty interesting because it's the bottom of the expanding triangle. It's a bull bar closing near its high. The overall context of the day is bullish. Some bulls would argue we have the channel line here, and then we have the break, and then now we have a higher low major trend reversal on bar one. That's a reasonable argument. The expanding triangle, the bottom of that is a reasonable argument, and it's a huge bull bar closing near its high. So a lot of good things going for bar one. When you get also in general, when you get a gap down and then a bull bar closing on its high, it increases the odds that you're going to end up getting some sort of bull trend and that this is a possible low of the day. So in general, on any given day, bar one has a 20% chance of being the high or the low of the day. I think that in this specific case, bar one had more like a 30% chance of being the high or the low of the day because the context for reversal up was pretty strong. Bar two, consecutive bull bars. It's follow through for the bulls. We're probably going at least a little bit higher, but disappointing that it did not close above the moving average, but still consecutive bull bars. Problem is now we're back in the middle of yesterday's range and the moving average is pretty flat. So I'm not really sure how much higher we're going to go here without a pullback. Remember, any given day, there's an 80% chance you're going to have a trading range open. And if you have a trading range open, then 80% chance you're going to get a minor reversal lasting at least 5 bars. So hoping for a bull trend from the open without a pullback is really not a very good strategy. With that being said, I think after bar one, we were always in long, and after 1 and 2, we're clearly always in long. So, you can make an argument we never really went always in short today. Obviously, the sell-off, 30, 31, 32, in that area, we might have briefly gone to always in short. We probably did briefly get always in short, but it never was all that strong. We ended up flipping back to always in long. I would imagine bar 43 and definitely bar 44, we were back to clearly always in long. Bar 3, a big tail on the top of bar 3. So disappointing bar. There's going to be buyers below 3 if we end up getting there. It's a bad low one short for the bears, but this is the middle of the trading range. So the traders who are buying below 3 are probably scalping. Again, it's still reasonable to have bought above 1, put a stop below, and just go for 20 points or something like that. Maybe go for something like this. See 20 points to be around here. So it's reasonable to do that and just see what happens. And again, occasionally, if you held, you do get these giant, windfall profits of 30 to 40 points. But again, so we're still on the buy above 1. There's nothing to sell yet for the bears. Bar 4 is a micro double top with bar 3. So 3, 4 micro double top, but closing right on the moving average and the moving average is flat. We're always in long, so it's really not all that good. You're going to expect there's going to be buyers below 4, most likely. Bar 5 tried to test down to the bar 1 high, which is the breakout point. So you can see, some traders, they don't buy above 1. They want to see what happens in case it's a bull trap. And we start to get follow through. And so what they're doing instead is they're placing limit orders to buy 1 tick above bar 1. If we're able to get back there at some point in the day, and you can see those traders would have been filled on bar 6. Why are they buying? Because they want the same fill, but they want more information. So it's a bit of a riskier strategy. If you do start to get a really strong bull trend from the open, you'll get trapped out. But you'll stay out of those times where bar one becomes a trap. So it's reasonable to do that as well. But that's one of the reasons why we're finding buyers on bar five. You notice by bar five, we have another doji bar. So 3, 4, 5 are essentially doji bars. And to me, that means we're probably in a tight trading range. Again, I would just look at the expanding triangle from the past day or so and be pretty aware of the fact that we're probably just going to end up going pretty sideways here. 6, you can see there were buyers below 5, so traders buying around the 1 high during 6. But a doji bar and a bear bar. Doesn't really matter that it's a bear bar, but it's a doji bar. Again, really what's happening here is it's a tight trading range. 3, 4, 5, 6, all doji bars. So tight trading range in the middle of the overall trading range, in the middle of the expanding triangle. I would rather just be waiting. I would either be long above 1, stop below 1, and hoping that we get the upside breakout of the expanding triangle and maybe a measured move up, which is what we got. Or, I would just be flat. I don't think there's any good reason to be short just yet. 7, a bull bar with a pretty strong close. It's good for the bulls. We might end up going a little bit higher, but if you're buying high in the tight trading range 3, 4, 5, 6. So I would not buy above 7. The only way you can buy above 7 is if you buy small and you have a stop below bar 1. Bar 8, a reversal down. I think 8 is a credible high of the day. You can see it's a failed breakout with bar 7. We've got a failed breakout above bar 3, but the problem is it's a flat moving average. And it was really hard to sell 7 if you were watching. 7 became a bear bar closing near its low in the last maybe like 10 to 12 seconds of the bar. It was, a doji bar, a slightly bearish doji for a lot of the time. And then towards the end of the bar, the bulls gave up after we got the failed breakout above 1. And that's causes the bear bar closing near its low. Basically, bar 8 initially pulled back to 50% of bar 7, or just about, and then bounced and then rallied back up to here. And the traders who bought 50%. So let's go look at it this way. I illustrate a point about limit order traders. Yeah, so this is what I was looking for. So you can see this is the bull bar, and look at what happened right here. We pulled back to a little bit less than 50% of the bar, and then we rallied back up to basically where the open of that bar was. So you can see the first thing that the bar did was rally to 50%, and then it sold off. But why did it sell off? Because the limit order traders who bought 50%, they ended up scalping out up here instead of looking to buy more. But they were hoping, potentially, they're probably always going to scalp a piece because 7 is not all that great of a buy. But they're potentially hoping that 8 is going to turn into a big bull bar closing near its high. And when 8 starts to stall towards the end of the bar, and they know it's not going to close above the bar 3 high, they just get out of their trade at the market, and that's what causes bar 8 to close on its low, essentially. 8, you can sell below. It's it's a higher low double top, a higher high double top, and neckline is the 7 low. It's reasonable to sell below 8. I think the problem is how tightly up this channel is. I think if you're selling it, you can see what happened is a lot of traders scalped out with 5 points. Why are they scalping with 5 points? Because you're still selling in the middle of a tight trading range. It's not very good to be selling in the middle of a tight trading range. So those traders, they get a quick 5 points and they just take it. They're hoping, if you're selling below 8, you're hoping that you've seen the high of the day and that we're going to get down here and get below bar 1. It's possible, but I thought that bar 1 was a more credible reversal, so it might not have been all that likely. And you can see we got below the neckline, the bar 7 low, and failed. We're forming a smaller expanding triangle, sort of a nested expanding triangle here. And you can see traders buying. 10, a bull bar, but a tail on the bottom, a tail on the top. This is not as good as it could be. 8 and 9 is strong enough to probably get a second leg sideways to down, but I think bulls are disappointed that 10 was not able to close on its high. If you had shorted above bar 9, you know that you're probably going to get a second leg sideways to down. But if 10 got a little bigger and closed on its high, that would be really concerning for those traders, thinking this might have just been a pullback and now we're going to start the rally again. Again, I was a little more bullish on the day, so I thought it was a bit more likely that we were going to get a rally. 11, I think, is the second leg sideways to down. I would not be selling down here. I would just wait. This looks like the bottom of a tight trading range. And then 12, a bull bar closing near its high. Why is 12, the most reasonable trade? Because it's a bull bar closing near its high and we're always in long. So in general, pretty much whenever you are always in long and you get a good bull bar closing near its high, it's usually going to be, as a blanket statement, it's usually going to be a pretty reasonable thing to buy. especially if you think there's a potential for a trend. However, one of the reasons I didn't think this was going to happen was because there was so much trading range price action here that I thought a trading range day was a lot more likely. And you can see, the bull bar 12, it got some follow through, but it ended up being bad. 7, bad follow through. 12, some follow through, then bad. 17, bad follow through. 24, bad follow through. 23, bad follow through. 26, bad follow through. So every bull bar is getting, every good looking big bull bar is getting bad follow through, which is usually not a recipe for a strong bull trend. We also didn't really have much for open gaps, besides the small body gap here, but it ends up closing over here. So it's really, this was unusual, I think. Lower probability for sure. 12, the bull bar closing near its high. We're always in long, closing above moving average. You can buy above 12 and put a stop below 9, I think, and see what you get. You know that it's probably going to go more sideways to up rather than straight up. You're probably not just going to get another bar that looks exactly like 12. But again, if your premise is that we've seen the low of the day, which is probably, the most reasonable premise to have if you're buying above 12, it's okay to just buy and, hold and hope we get something good. Obviously, it's, near impossible to hold through all of this stuff, but there are some algorithms that will probably do that. 13, follow through, consecutive bull bars, but a big tail on 13, so maybe not quite as good as it could be. 14, more follow through for the bulls. So, yes, follow through, yes, bull trend, but, how good is it? Could be a wedge, 3, 8, and then 14, something like that. So basically, if 15 is a big bear bar closing near its low, bulls are going to exit, bears might sell. And exactly what happened on 15. I marked 15 as reasonable. I thought it was okay to take, betting that it was the possible high of the day. The bulls have had a couple of decent chances, and the bears keep getting pretty good bear bars. The bulls I did not think should have allowed 15 to close so strong. Obviously, the problem with selling 15, the glaring issue is that you have 3 straight bull bars. We're probably always in long, and this channel up is pretty tight. I think the channel up is the most important part because, you generally don't want to fade tight channels, especially when, it seems like we might end up getting a bit more of a rally. Possible head and shoulders top, left shoulder, head, right shoulder. So possible head and shoulders top, possible wedge. I thought it was reasonable to take the sell on 15, but you probably need to stop a measured move plus a couple of ticks. The reason I always say plus a couple of ticks for this is because, a lot of times it'll go for the exact measured move, which is what happened here. So you don't want to put a stop it was 1 tick within. So if you'd used the stop of just the measured move up of bar 15, you would have been fine. But in general, I like to give it a couple ticks. Maybe you put a stop somewhere right here. So it's really not that, not as ideal as it could be. And like I said, with 15 closing, basically right above the moving average, it's probably going to be more of a minor reversal. 16, disappointment, which is relatively expected. 16, it sold off. So it initially rallied to the bar 14 close and then sold back off to around the bar 15 low, and then ended up closing pretty strong. So, or not strong, but a lot stronger than the bears wanted it to. So pretty disappointing bar on 16, but it's relatively expected because, if you're selling 15, you're betting on at least a second leg sideways to down, which you still should get. 17 consecutive bull bars. That's not good for the bears. You did not want to see consecutive bull bars. You were hoping that we were going to get more, a bit more sideways to down price action rather than consecutive bull bars. Granted, you're probably not going to get another bull bar, but I think when bears look at this, they see that 8 was kind of a credible sell, 15 was somewhat of a credible sell. So they're probably not going to take a third reversal down because usually if you get 2 reasonably credible sells and neither one of them works, then, traders will wait for the market to form some kind of new pattern before taking any more trades. Can you buy above bar 17? Yes, it's consecutive bull bars closing near their highs, but the bulls are not getting very good follow through. It's, the market's moving in a channel, right? It ended up being kind of a triangle. You could argue like this, and you can think of it that way as the triangle. That's fine, but I kind of thought of it more as a bull channel today. While I was trading. And so you can buy above 17, yeah, but you're probably going to get bad follow through because the bulls are not getting very good follow through. And if you're buying above 17, your stop is below 16, so your risk is big and it's potentially a trading range. So buying high in the bull channel, which is usually where traders end up taking profits, and you're buying with big risk. So, your best case scenario is not all that awesome here. So it's kind of a difficult trade to take. It's a reasonable thing to do. But again, traders, they get the new high, they sell. They get the new high, they sell. So what do you think is going to happen when we're going to get the new high here? They're going to sell, and that's going to cause 18. The bear bar closing somewhat near its low. I don't know. You probably don't have to exit below 18, but it's creating a really tough situation for you. So pretty difficult to make decisions in here. I think better to just wait and not trade. 18, it's a possible wedge. It's still a possible head and shoulders, but I think if we were going to sell off, it probably would have happened somewhere in here. So I don't think 18 is a very good trade. 19, a bull bar, but a big tail on the top. Probably going maybe a little bit higher, but I'm not sure how much higher without a pullback. This looks like a bear flag to me. It does not look like a strong bull trend. 20, again, disappointing follow through. So we got another new high, just tested above the 18 high and ended up finding sellers. Outside down 21. So good for the bears, probably going at least a little bit lower. But again, how much lower? The channel up is pretty tight. So, there's a lot of confusion in here. I think this is going to evolve into a trading range. I do not think that we're just going to channel up like this for the remainder of the day. 22, a bear bar, but really not that good. It was an inside bar for most of the bar, so it was a possible IOI pattern, but it ended up trading below 21, which is not what you want because that makes 21 the signal bar. And again, it just looks like you're towards the bottom of the channel here. So you can argue about wedges and stuff because there were wedges, but they really weren't all that great, and they didn't really have many good signal bars up here. So again, are we probably going to get back to maybe the 15 low? Yeah, probably, because it was a credible sell, but I don't think we're going to go, if we get there, it's going to be in a difficult way to trade. So I guess that's my main point. 23, big outside up. It's a breakout attempt above the bull channel, but big bar, big risk. So most traders are not going to want to take the buy above 23 with this much risk. I think it's better to just sit and see what happens. If we start getting consecutive bull bars and start getting a good rally, then you can look to buy. But again, in this area, I think it's probably better to just wait. Every single, a lot of the good bull bars today are not getting good follow through. So it's probably better to assume that if you're buying above 23, you are also not going to get good follow through. And sure enough, you get a doji bar 24. We don't even trigger it. Bulls would argue that new bull trend on 23. 23 is a breakout. So it's becoming its own bar, or it's trying to become its own bull trend, breakout above and a measured move up, something like this. At the highest, probably the most conservative measured move would be like right up here where we didn't even end up getting. But again, big bar, big risk. I'd rather wait for the follow through, and you get a doji bar, high one inside bar on 24. When you're getting a high one, so sorry, back to my main point. 23, a bull bar, but if the bulls are going to argue that this is a new bull trend, you have an inside bar, high 124, and you're buying above a doji bar early in a bull trend. So it's really just not all that good. None of this is as good as it could be. 25, another doji bar. So we now have consecutive doji bars. So if you bought hoping for a bull trend, it's early in the theoretical trend, so it should be pretty strong. And instead you're getting doji bars 24, 25. 26, a bull bar closing near its high, but I am not buying. It looks like you're buying way too high in the trading range. What's likely a developing trading range. It's a bull channel, but bull channels are just bear flags. So this is really, I would just rather wait and see what happens. Looks like a breakout attempt above this channel here, and it's a possible wedge over here. And you could argue wedge, or you could just simply look at it and say, well, it's part of the expanding triangle. That both of those are fine. So 27, a bear bar closing near its low. You can expect two legs sideways to down once you get 27. So traders who sell here, they're probably going to get bad follow through, but we're also probably going to get another leg down. 28, a doji bar. So doji follow through, not what traders wanted, but relatively expected. You can see we traded back up to the bar 26 close. So if you sold, or if you bought the close of 26, you were disappointed 27, you used 28 to get out around break even. 29, an inside bar. So it's a low one short for the bears. You can take it. We're probably going to get to the moving average. And I'd imagine that this is the start of the trading range. But I'm just not sure how much lower we're going to go. And it's just kind of a tricky spot to sell, but you can definitely take the short 27, 29. They're both pretty reasonable. Then you get a big bear bar 30. To me, if I'm short and I see 30, I would probably just take my profit. Yes, we're probably going to get back to this close, the 15 close, but I think 30 is close enough and your risk is big now. So I would just get out at the market. And you can see it's a strong close below the moving average. Yeah, and big enough for a second leg sideways to down, but I'm really not sure how much lower we're going. And you get disappointing follow through 31, a big tail on the top. Inside bar, low one, short 32, but you're selling so low in a bear trend. If you're selling 32, you have to understand you're trying to get another bar like 30. You want to see a big breakout bar. You could argue that this is the spike, 1, 2, 3, and the start of the channel. I would argue that 1 might be its own spike, and then 2 is the start of the channel. But either way, you could say that the 2 low and the 9 low are the starts of the channel. So those are possible magnets. But so if you're selling below 32, you're hoping that you're going to get a collapse down to one of those magnets, but you're probably not going to. That's why when traders get bad follow through on 33, they probably knew they were going to get bad follow through. And so when they did, they acted quickly and bought back their shorts. I don't know if they even made 2 points. So they could have made 2 points, but that's it. So some traders took the 2-point scalp. And you can see those who didn't use the tail on 34 to buy back their shorts around break even. Hence the cause of bar 34 being a strong bull bar closing near its high. It's because bears are buying back shorts. Do you buy above 34? I would not. The move down from 27 was to 33 should have produced a lower high. It's a strong enough bar, or it's a strong enough move down that, again, we should have probably gotten, a lower high somewhere in here and then started to go sideways. It's pretty unusual that this kind of thing happens. 35, an inside bar, a high one for the bulls, but I would rather not buy it. We have basically 7 bear bars of the last 8 bars, so better to wait. Big bull surprise, 36. It could be like a second leg trap, 34, pullback, 36. So maybe a second leg trap, but really I think better not to do anything. What are you looking for now, right? So bulls had their leg 1. So either you're looking for this, a leg 1, and then a pullback, and then a leg 2 measured move. So that, you can see we touched it and found sellers. That would be ideal for the bulls, I think, but probably going to have to go more sideways. What do the bears want? Well, the bears see the bull channel as a bull trend, and they got the trend line break, and so they want some sort of lower high major trend reversal here. So, I think one of those 2 things is probably going to happen. I doubt it's going to go sideways for the remainder of the day. I'm just not sure which is going to happen, and I'm not all that sure when. But you just have to basically wait for it to start to form and then try to trade in that direction. 37, an inside bar. It's potentially a couple legs up, something like this. It's a pretty tight channel up. I'm not sure how much higher we're going to go, again, without the lower high, but not worth selling the low 1 below 37. You could argue it's a low 2, but we never triggered. But you could argue first reversal down 35, second reversal down 37, but it is a bull micro channel, which makes it a little bit less likely to work. 38 trades back to the bar 35 high. So the traders who sold above 35 scaled in higher, tried to make money, but you can see we never went 1 tick below the bar 35 high. And those traders should have made money. So it's possible that we're going to start to have some trap bears here. It's not all that likely, but it's possible. And then you can see 39 rallied back up to the 36 close. The bulls who got the close, they scaled in at maybe a 50% pullback at 36, or they just scaled in, or maybe they tried to scale in around the high of 35. All reasonable things to do. They used 39 to exit their longs. And instead of selling off and getting, basically back to this high, we got a bull bar closing near its high, bar 40. So again, this could just be, this channel up is pretty tight. It's notable that the move from 33 to 40 has been, decently tight channel, but I still, I'm not all that convinced that we're going a whole bunch higher. We're getting higher lows and higher highs, which is something to keep in mind about the whole day is, even with yesterday, right? So we got the reversal up here. We ended up getting a lower low double bottom. And pretty much ever since then, we got the higher. So this is where the bull trend started. We got the higher high, a higher high. I guess this would be a higher low, I suppose, but I don't know. I was looking at the broader pattern, and I think higher high, higher low, higher high, higher low, obviously higher high. So I did, it was reasonable to think that the market was more bullish here overall because of the constant higher lows and higher highs. However, it was not, exceedingly bullish because of the move down from 27 to 33. It could have just been a bear trap, which it did end up being, but I would rather wait for more evidence of that. 41, follow through for the bulls who bought above 40. So good, but a doji bar. 42, more follow through for the bulls. So again, consecutive doji bar is really not as great as it could be, but we are probably going at least a little bit higher. And then we got 43. 43 is an interesting bar. We have a triangle. You could argue it's a wedge, 31, 36, 42, but no one wants to sell a bull bar. But really what's important is we have a triangle, and the bulls want to break out above and a measured move up and start the bull trend. The bears are hoping the breakout's going to fail. I was not all that confident that 43 was going to succeed. I thought we might end up going more sideways here, but instead you get a huge bull surprise, bar 44. Bar 44 was unexpected. And like I said, it closed above the high of bar 27. So it's possible we started the bull trend. again, it's only bar 44, so there's still 30 bars left in the day, so we can still make a reasonably decent move here. So I think it's better to just wait and see what happens. Or it's better to be long or to be flat. You can't really be short here, but pretty reasonable to buy the close of 44 since it closed so strong. And where's your stop? Probably you have to put a stop below 39, which is too bad because it's a really wide stop, so your risk is pretty big. But realistically, you're never going to let that stop get hit. If we get a second reversal against you that's reasonably strong, you just get out of the trade. 45, it's follow through for the bulls, but it's not really that great. They were hoping for a bigger bull bar closing near its high. Same problem with 46. These are follow through bars, yeah, but we're pretty far above the moving average, and I wanted to see a bar that looked similar to 44 and start some sort of strong bull trend. Instead, we're getting kind of disappointing bars, 45, 46. And again, bull trend days constantly form wedges that fail, so could be a wedge, bar 3, bar 27, bar 46, but a bull bar, so no one's going to be selling it. An inside bar 47, probably buyers not too far below. It's a low one short for the bears. It's a high one for the bulls. Probably buyers below a high one in a bull trend. 48, follow through for the bears, but it's not good. No one wants to sell the close of 48. There's probably going to be buyers there. The bears need one more pretty strong close to convince traders this is still a trading range, and so odds are they're probably not going to get it. And they get disappointment 49, sure enough. Is it still okay to be long? Yep, you can definitely still be long, but you might start to get a bit more of a sideways, 2 legs sideways to down, and then some sort of second leg up for the bulls. 50, a bull bar closing near its high. It's reasonable to buy 50. I would say it's probably still a high one. So if you do buy above 50, you still have to use the proper stop on 39 because it's possible we trade below 50. So if you buy 50, you probably trade small and look to either add on higher or add on, maybe below 50 if we trade there. But we still should, this channel up from 39 to 46 is pretty strong. We still should continue at least a little bit higher. Follow through for the bulls 51, but not as good as it could be. A big tail. You can see we tried to break out of the 46 high and it ended up failing. We have a big tail. 52, another bull bar. So good for the bulls. We might actually end up going higher here. It's okay to buy above 52. And then you get a climactic bar 53. This it could be climactic. We might find profit taking soon, but no real sign of a top yet. So buy the market, buy the close. Follow through 54, but a big tail. Disappointing, but okay to be long. Buyers below 54 and open gap here. So still buy the market, buy the close, and we get a continued rally 55. Again, still okay to be long, okay to be buying. Doji bar 56. So a lot again, still even though we're rallying, with the exception of our 43, look at 44, kind of bad follow through. 50, kind of bad follow through. 53, kind of bad follow through. 55, kind of bad follow through. So still not quite as strong a follow through as you'd like, but we do have open gaps and we are going higher. We have the open body gap here with the 27 open and the 45 close, and we have an open actual gap, 50, 51 high, 54 low. 57, a bull bar, but a big tail on the top. Probably buyers not too far below, probably sellers not too far above. Obviously, a really credible buy below 57. A lot of times when you're taking buy belows like that, it might not reverse up in the next 1 bar or 2 bars, but it might take 4 or 5. This is one of the situations where it reversed up almost immediately. But sometimes it does take, a handful of bars, 4 or 5 bars for the reversal up to happen. 58, you can see there were buyers below 57. Obviously not very surprising. 59, a bull bar closing near its high. And you can see we got sellers above 57 during 60. 59 is a pretty climactic looking bar. And, this bull trend is pretty overdone. We're probably going to go sideways soon. But I'm not sure, there's much potential for the bears to get really anything else done today. I think this is going to be pretty sideways for the rest of the day. The breakout at the end of the day was kind of surprising. You can see we got an 00 pattern, 76, 77, and then just a big breakout. 61, bear bar, but again, I think this is just going to be a couple legs sideways to down. I don't really think we're going to go all that low. And it's notable that the breakout, is pretty much completely sideways. It wasn't really down. This whole move this whole pullback ended up being completely sideways, which adds strength for the bulls in their bull case. 62, a bull bar, sellers above 61 is not surprising. 63, an inside bar, so an IOI pattern to 63. This is possibly a tight trading range and a final flag. Probably sellers not too far above 63. It's hard to be buying up here. You know that if you're buying, you're probably not going to get a lot of follow through. And it's probably, if you do get follow through, it's probably going to be sideways first and a bit difficult. 64, tail, sellers at the new high, and then a doji bar 65. Maybe a micro wedge here, 57, 60, and 65. But, You could argue spike and then wedge channel, but the channel wasn't very big. It just wasn't really is not that good. It's a very minor reversal, I guess, is what I'm getting at. So it's not really worth selling below 65. Bear bar closing near its low, 66. Yeah, an outside bar, but big risk. We're not going much lower. There's going to be buyers here. Disappointing follow through 67. Bears are going to buy back their shorts. That's causing 68 and consecutive bull bar 69. You can buy, but it's not that great. You can see the market is pretty much just deciding what magnet and measured move it wants to test at the end of the day. We had a lot of them. I thought that the top of the channel was one. We ended up doing the measured move up of here to here. So basically the wedge, and then you got a breakout above a wedge and a measured move. So in general, when you break out above a wedge, 50-50 chance it's going to succeed, 50-50 chance it's going to fail. And this is the one we ended up picking today. I thought the leg one, leg two that I showed earlier, one, pullback two to here was more likely and that we go sideways, but we actually ended up continuing upwards. For stop order trades on the day, I thought one was pretty credible, expanding triangle bottom, 30% chance it's the low of the day. And, a lot of traders don't want to take a trade with a 30% chance, and that makes sense. But I thought there's still a pretty credible buy above one. You could probably sell below 8, but it's kind of hard to do. You got to be able to make quick decisions. A lot of traders who took that just took a 5-point scalp and got out and caused the wedge 3, 6, 9. 12, again, credible, but might be more of a Walmart trade, to be honest, because I'm not, if you're buying here, you're still hoping that we've seen the low of the day. So it's still that type of trade, but that if we do rally, it's not going to go straight up, and it's probably going to be a difficult trade to sit through. So I'm not really all that sure. I'm not all that confident that I'm going to be able to buy above 12 and manage it properly, I guess is what I would say. So it might be more of a Walmart trade where you buy, you hope you've seen the low of the day. As long as you have your premises, or as long as it doesn't trade below, your premise is valid. Realistically, it shouldn't fall below the 2 low or the 9 low if we are going to get the rally. So it's probably okay to put a stop there, especially once we trade up above the bar 8 high. So we create a new higher high, then a stop below 9 or 2, I think makes a lot more sense. 15, it's a wedge, it's head and shoulders. I don't know, it might be more of a minor reversal. It's hard to sell because of how tight the channel is, but it's also hard to stay long when you see 15. You can take 17, but I just would not. 27 makes sense. You're selling pretty far above the moving average, and it's a small bar, versus 15 is a big bar, and you're selling on the moving average. So traders prefer to sell the smaller bars. If you're trading against a bull channel, you prefer to sell the smaller bars further from the moving average. And same thing with 29. It's an inside bar. It's a low one short. Still reasonable to do. Second reversal down at a slightly worse price, so very reasonable. 40 kind of makes sense. I'd probably rather wait for like 43 or 44. 44 changes the character of the day. 50 makes sense. Reasonable math. But again, I think if you're taking 50, you're probably putting a stop below 39, and it could be a bit difficult to sit through. But, occasionally what will happen is something like this, where it is a doji bar and it's maybe not the best looking high one in the world. But you start to get follow through 51, 52, and then traders, when they see 52, they know there's 3 consecutive bull bars. So they know that there's going to be buyers below 52, even if we do go below 52. So they just buy the market, and that causes 53, which is still buy the close by the market. And then tight trading range. I would probably just leave everything alone after, if you're long, you probably get out below 60, and I just probably wouldn't touch any of this. It's a bit more difficult, I think. On the daily chart, pretty great looking bull bar, but I don't know. To me, this might end up being climactic. I'm ready to be proven wrong if you get another big bull bar closing near a tie. I guess, the market's not open tomorrow or Thursday, but on Friday, if we get another good bull bar closing near a tie, I'm ready to be wrong. But to me, this is a tight trading range. Well, this is a tight trading range, but I think it's going to be a final flag. So oftentimes when you get a final flag, you get a breakout above. In a bull trend, you get a final flag, you get a breakout above, and then a reversal back down. And I think that might be what we're setting up here. So even if we do get the breakout above and go a little bit higher, I think it's pretty possible that we get a reversal back down and test back into this area, and that starts the trading range. Weekly chart, you can see we have found buyers. This is a bull close, by the way. This last week, this is a bull close. You can see we found buyers below. We're probably going to go. I would imagine we're going to test the all-time high and see what's there. That wouldn't surprise me at all. And again, this whole big thing is pretty much trading range. It's still within the tight trading range that we have on the daily chart. So keep that in mind when we do go to the all-time high. Bulls really need consecutive bull bars closing near their highs. But whenever you have a bull trend day like we had today, 75% chance tomorrow of 2 hours of sideways to down trading only a 25% chance of consecutive another strong small pullback bull trend day. So it's really not as likely that we end up getting a really strong rally on, I suppose it would be Friday because the market's not open tomorrow or the 4th. All right, that's it.